Before we begin with today's market analysis, I would like to mention our new channel membership options. This is a special introductory offer which will open access to members-only trading strategy videos that are based on high-value, high-conviction investment strategies and are characterized by superior risk-to-reward metrics that target massive, market-beating returns over time. Please note, this is a limited time offering of just $9.99 per month, but members that sign up during this introductory period will be able to lock in this new low rate for the entire duration of the membership. Again, this early sign-up period will allow you to lock in this low introductory membership rate for life, and these new low introductory rates will only be made available for a limited time. Monthly membership prices will be going up after this short introductory period ends. With these comprehensive, members-only trading strategies, I only choose high-quality, high-conviction stocks that are easily accessible, with relatively low share price values that are designed for easy trade positioning, and combined long-term trading gains are expected to far outperform the monthly membership rate of just $9.99 per month. Join now to lock in your low introductory rate and start trading stocks with the pros. Now back to the video. Here we have the hourly price chart for Nvidia Corporation, stock ticker NVDA. So as we can see here, the stock is falling quite sharply, and we're seeing some losses, certainly some losses in market cap that are developing quite quickly. We've seen some negative reactions to earnings reports in recent trading sessions. In particular, the Tesla earnings report was not received favorably by the market, and we saw similar kind of reactions occur with Google, the Alphabet, the Google parent company. Even though that earnings report was not terrible, I think the earnings miss was a penny. It was not much in really in the negative direction. But that stock is selling off quite sharply. I just posted a video on Google, the Alphabet, if people are interested in seeing that, because the earnings report was not, it really was not much of a negative. There was a little bit of weakness in the YouTube segment, but overall, the earnings miss was 1 penny relative to market expectations. So it really wasn't enough to kind of justify the selling pressure that was seen there. So we're really seeing broad sell-offs here in the market. And this doesn't seem to be stopping anytime soon. We are getting a bit of a bounce here. From these lows. We can kind of drill in a bit here to see exactly where we have traveled. So the low currently comes in at 106.30, and that's an interesting price level because if you've been watching these prior videos that I've been posting on Nvidia, you would be seeing in the comments that I'm asking about this 107 level. Do we think that there will be a drop below this 107 level? Where did I come up with this number? I'm not a fortune teller or anything like that. What I was looking at here would have been the lows from the May 31st trading session, which was another important trading session. And here we can see that the low from that trading session was 106.94. So, currently, this is where we are. I mean, this is where we are traveling today. We're seeing a bit of a bounce here, but the ultimate low here was 106.30. So we did see a breach of that level by 60 cents. So this does look like, an important downside target. Again, it's not because I have a crystal ball. It's not because I'm, able to foresee the future or anything like that. But after support levels, roughly 118 gave way, the next major level to the downside does come in just below 107. So as we can see here, that target was reached. And that projection was accurate. So currently, as we can see here, we are getting a bit of a bounce. We have to kind of look at the broader context for the moment, because when you start to see major declines like this, you really have to start pulling out. I mean, it's in the time frames. I mean, even the hourly time frame is a bit small. You would even want to go out to the dailies and maybe even the weekly chart, depending on how big the decline is. But we're seeing declines here broad based. I also recommend people look at my Meta Platforms video, the Facebook parent company. That stock has completely fallen through the floor. I mean, it's something to see. I really do recommend people take a look at that video. But so overall, the selling pressure here has been extreme. It's been broad based. It's seen throughout the S&P 500, throughout the NASDAQ, throughout the Dow. It's much harder to find a stock that's not under selling pressure at the moment. Currently we are seeing a bounce here. The question is, how much longer can this last? Where do we expect this bounce to start failing, if that's how we're looking at this? Currently the indicator reading is still showing negative momentum, and this draws all the way back to the stock's all-time highs, which were posted during the June 20 trading session, coming in at 140.76. So this is a momentum reading that has been in place for quite a while. It's quite strong. So that helps to kind of validate these downside price moves. And then in addition to that, you also have this rising condition in the trading volume, which does suggest that selling pressure is far outweighing the buying pressure. I don't want to zoom in here too much because it really distorts the chart. But as you can see here, the trading volumes are massively outstripping, the buying activity that is occurring here. In addition to that, you also have the moving average cluster, which is starting to, show some fairly significant realignment, because we're seeing some important crossovers in the moving averages themselves. We've already seen this yellow line cross below all three of the other major moving averages. That's the yellow line is the 20-period exponential moving average. So since this is the hourly chart, this would be the 20-hour exponential moving average. But now we're also starting to see the 50-hour EMA cross below these other two important moving averages. So here you can see the orange line is crossing below the purple line. That's the 100-hour EMA. And now the blue line as well, right here. And this is the 200-hour exponential moving average. So you've got both of these shorter-term moving averages now trading firmly below the longer-term exponential moving averages. And this would be another bearish signal. So currently, we are seeing a bit of a bounce here. I'm not surprised to see this happen right around the 107 level. I've been talking about this level for quite a while now. Ever since these declines really started, I've been pointing to this 107 level. That target has been reached here. We did see a fairly significant bounce here to the top side. So currently, as I said, these recent lows come in at 106.30. And now to the top side, we're seeing highs. We saw a bounce all the way. This came close to 115.80. So that's a fairly significant short-term price move here, and it does kind of confirm that this 107 level really was the important area to be watching. We did see that area tested and breached, and then we saw a significant bounce from there. So this was where a lot of the market orders were being centered. The market share price was kind of attracted to that level. And then once we did see a bit of a breach there, we saw a 60-cent breach, and then all of these buy orders were triggered to the top side. So these are very significant levels to be watching. I will continue watching these areas, and we will be looking to see the extent to which this recent short-term rally here can continue. So I'm curious in hearing about what people think about this. Do you think that this current rally is sustainable? If it does start to fail, where do you think that these rallies are going to start to fail? Here's the current market analysis for Nvidia Corporation, stock ticker NVDA.